Is it too late to start investing at 50? Well, absolutely not. I don't think it's ever too early or too late. You're just going to have to do some strategy to get a catch up. So let's talk about a few things. So how do you accelerate? What are some strategies and key points starting later? How do you build up more passive income now and start getting into that? Now, this is assuming you actually have a cash machine, have a job, and you're making money, so you can start putting more money away. So you'll have active income becoming passive income. And then the last thing I want to talk about are the do's and don'ts as you start putting this plan together. I can tell you the first one is don't do it alone. You're crazy. There's too much to know, and we don't know it all. Like, you have got to have an expert team, which is why I put together Integrated Wealth to help you have a team. So it's me and about 28 business and financial and marketing and sales development experts that help you get a plan. So number one, how do you do an acceleration catch-up? So let's talk through a few things. Number one, you want to max out every retirement plan. If you're in a job, max out your 401k, if it's a good 401k, or pull it out and put it to other contributing funds. If you own a company because you're an entrepreneur, like I have a 401k with my own company, I max that annually on a regular basis. I'm going to continue to do it even, past my 50s. For those of you that are accredited, investing in tax efficient cash flow things could be more rental properties. It could be more gas and oil. It could be aviation, not aviation stock, but direct aviation. There's all sorts of ways to do that through different memberships or fractionally, but you get the depreciation back, so it helps your tax strategy. See, a lot of you're not paying attention to the tax side of this, and taxes alone overpaid. The statistic is if you overpay taxes $10,000 a year, too many taxes, for 20 years, you put $1.1 million to the IRS versus your own account. Why would you do that if you want to just get a little more strategic, lean in and watch your taxes and make sure that you're not overpaying 5, 10, 15, just keep it as great as you can and as strategic as you can. Coming soon in the next weeks, I'm going to be doing more about the big, beautiful bill that just came out July 4th, and make sure that you are executing every tax strategy possible. The other thing, which is obvious and you coulda, shoulda have been doing since you were 20, is make sure that you're reinvesting all your returns. So if you have to live on the cash flow of your investments, that's okay. If you can reinvest all returns, it's even better. You'll create a better power of the compounding. Now, how do you build more passive income assets? So that would be things like more rental properties, syndications, dividend stocks. And some of those dividend stocks are 9, 10, 11%. Those are really great if you can go out and find them, which they're everywhere. Those of you who want to see how a market can actually run in a market account, we use iFlip. It's in the show notes below. It's a software, and it puts you into smart folios. So grab the link below. You can open it for free. You can open a Roth for free, and talk to your tax team. Is a Roth part of your plan? Can it be part of your plan? Could it be part of your kids' plans? And other passive income options is a cash machine. Probably my favorite is build your own company. You say, well, I don't know how to build it. We'll teach you. I have cash machine books. Put more cash in your pocket is probably one of the greatest things that I personally teach, is how to do better marketing, better sales, and actually grow a cash machine more than anything. And then tax strategies right behind it. You want to make as much as you can, put it away for the compounding power. You want to make it, invest it, keep your taxes low, and get strategic about how you're investing your money. You can use your self-directed accounts in your 401k accounts, self-directed, and get more diverse options. So the company we use has 52 different options. You can look at self-directed companies. When you look at very traditional firms like Schwab, Fidelity, all of those, they're going to let you self-direct, but it's only to their assets. It's only to their stock, their funds, their products. You're not going to get to go buy real estate out of those kind of companies. So you're going to have to get a little diverse in where you put your money. And just be mindful where you're putting your money anyway. And is that really the best bank? Is that the best investment platform for you? Now, before I continue on, I want you to subscribe to my channel. We're here 5 days a week. And click that notification button. Share this with 5 or 10 friends and get in the conversation with money. I have a site called askloral.com, ASKLORAL. Ask questions, make a request, and be in this conversation about money. Because at the end of it all, if this is what you want, this is my favorite thing to teach and have a conversation with you about. Because it's more about a conversation than teaching you anything. It's about helping you make decisions and pros and cons, connecting you with an estate expert, a corporate compliance expert, an actual trust, the person who structures the trust. You say, well, doesn't the estate lawyer do that? Sometimes you can get that done in other places, and they sign off on it based on the entire team. You also want to load it up with life insurance. So together, this becomes a very integrated plan that you can pass on through very clear directives to your beneficiaries beneficiaries, the worst thing you could do is just build it all here, leave, and leave a mess behind, because it could take them years to sort it out. They didn't create it. They don't know your mindset or your thinking. At minimum, one of the things I tell people on this legacy plan, at minimum at this point, create a video of what you want, your wishes, your intentions. I'm about to do that again because my kids are now full adults and I'm redoing my trusts and all my things at this point. Same reason. I want a legacy that they know how to manage when I'm gone. Last thing, you want to prioritize as high as returns as you can, but not at the compensation of the risk. It's a little later in life, so you want to make sure that you're really managing that and looking at that. If you don't know how, again, this is where you get a bunch of experts around you to actually give you that insights. Other things, don't get stuck in a very conservative plan. So if you parked and prayed your whole life, don't think that that park and pray plan might make it. So if you want to, actually know that you're going to be able to exit and be free and have the cash flow that you want later in life, it's got to be laid out pretty clearly for you. If you don't know how to do that, you need an expert to help you do that. Last thing, you want to look for that strategist and say, compare, just for your own knowledge. I think it's an interesting exercise to compare what a 10, 15-year compressed plan. How do you do a 30-year plan in 10, 15 years? How do you get it done? How do you actually get more out of it? And I can tell you, the key will be making more money and investing more money and paying less tax. So let us help you at any time. Grab a session with our senior strategist in our office. So click below and call our office, get a gap analysis session where we can talk through where your problems are, where your problems in your gap, and how we will have the solution or an expert for you. Talk to you tomorrow.